About 90% of people who enter the crypto space lose their money here. Today, I want to talk to you about how not to become part of that 90% statistic, but to be among the 10% who actually make money. Today, we are going to talk about a syndrome called FOMO. It's precisely because of this that people lose their money, take on excessive risks, buy assets they don't need, purchase them at the wrong time, and so on. To start, we need to clarify some terms. So what is FOMO? It's the fear of missing out. To make it clearer, let's turn to Google. FOMO is the fear of missing out, a psychological state in which a person feels the fear of missing a profitable opportunity. In trading on financial markets, FOMO manifests as the urge to make a trade, not because the chosen strategy dictates it, but along with the crowd, because everyone around is buying. This is a very important nuance, and I want to emphasize it. The influence of FOMO on traders can be negative for several key reasons. The first is impulsive decisions. Traders may make hasty emotional decisions, excessive activity. So, a trader under the influence of FOMO will trade a lot, open a large number of deals, and constantly end up at a loss. And the third key factor is that under FOMO, people tend to ignore the risks that come with trading crypto. So people in their attempts not to miss out on what they think is an opportunity they see on the chart are willing to invest any amount of money, take on any leverage, and as a result, you understand the outcome is always the same. People they lose their money, leave crypto, and think that the market is bad or that they are here. And the market maker decided to inflate things. But let's not blame market makers or external forces. Let's return to the basics and talk about how the market is structured and what market forces drive it. In my view of the world, the market is driven by two main forces. It's fear and greed. We can see this very clearly in a well-known image. I think you've already seen it, the psychology of the market cycle. That is, generally, all market cycles follow more or less the same scenario. Initially, the market is in a state of disbelief, in a state of depression. You can see this from the right side of the chart, right? So when we are at the lows, nobody wants to buy anything. They lost all their money, so nobody is interested in investing, and so on. After the market enters a small rally, people initially don't believe in the whole thing. They think it's some kind of nonsense, or they haven't heard about it at all. Next, when it happens, the first big green bars will discuss all of this on a specific chart. People still think that this is some kind of fake, that this rally will happen now and will also die out, like all the following ones. But then at some point, when euphoria reaches its peak, people start flooding into the market. Let's take a look at one remarkable chart. I'm sure if you're into crypto, you've looked at this chart many times. We'll go over how the last few bull cycles in crypto played out. We'll analyze it starting from 2020. But you can look at other cycles. It was absolutely the same there. So let's start with 2019-2020. Remember, who was talking about crypto in 2019? In parentheses, nobody was talking about crypto. Why? Because Bitcoin was in a consolidation zone. So if we look at the psychology of the market cycle, it was somewhere around here in the depression phase. Nobody was interested in it. Then during the COVID dump, they finally killed crypto. It's not really good for us at such a large scale. You can see, but if you measure it with a ruler, the drop was still 60% from what it was. But at the same time, let's remember 2021, let's recall the information landscape. At that moment, I was kind of into crypto. Just a little bit. I was in the information space. I bought some things, I sold some things, but at some point around, again, in the middle 2021, maybe during the winter, everyone just flooded in. The media started buzzing about crypto, and even those people who had never had anything to do with it suddenly became interested. Why did this happen? Because Bitcoin made almost 10x from its COVID low. Not just almost, but more than 10x. So from a mark of around $4,000 or $5,000, it became worth $60,000. And then it had a second peak at $69,000, where it was about 15x. And it was at that moment that the market was in that very state of euphoria. Everyone thought we were going to be fabulously rich.
Right, yeah.
Do your homework and check out the news headlines from 2021. Bitcoin is soaring to $100,000. This is the new digital gold. Countries are adopting Bitcoin. The 3rd, 5th, 10th, we're just flying somewhere into the stratosphere. Remember how it was in The Wolf of Wall Street? This company is going to take off. Well, you get it. And the same thing was happening there. But at some point, the celebration of life has come to an end. That's right. Those two most famous peaks in Bitcoin, after which the market, it went into a prolonged decline that lasted over 2 years. And if we look at it, Bitcoin corrected from its peak by almost 80%, around 77%. Is that a lot or a little? Well, for me, that's quite a lot for such a solid asset like Bitcoin. When we're in a state of market euphoria, it seems to us that the asset will keep growing endlessly. We feel like if we don't buy something right now, that's it. There won't be any more opportunities in our lives. And this is usually where people get burned in the market. So if you take this as a bit of homework, open one tab with the psychology of the market cycle and another tab with the Bitcoin chart, you'll see that they repeat almost exactly from cycle to cycle. It's just because that's how market psychology works. It's just how people are. And if we want to make money in the market, we need to take a few fairly simple steps to fight FOMO and avoid making outright stupid decisions. Getting back to the topic, by the way, about what the market is bad, the market makers liquidated me, and so on and so forth. You know, those people who always love to make excuses. I want to insert a little truth into your life. In reality, market makers don't have that much influence on your trading. In reality, the market is completely neutral. All your decisions are made solely by you, and all your profits and all your losses depend solely on you. And if you initially have a strategy, if you act according to your plan and it's a reasonable one, then you will indeed make money in the market. If you've been following my channel for a couple of years, I started it in 2022, right at the peak of the bear market. Yes, I mentioned that buying Bitcoin at $20,000 is quite a good move. It's likely to be quite profitable. Doesn't matter whether you bought at 20, 25, or maybe even at 16, you did it. You still made over 5x on your investments. On the other hand, if we're talking about buying Bitcoin right now, in my recent videos, as you know, I'm not as optimistic about buying Bitcoin. It's simply because it hit 100K, everyone became interested in Bitcoin. It became a must-have for everyone. And when classmates, friends start calling you, asking about how things are going in crypto, what to buy, that's a very good sign that it's time to get out of the market and sell. Well, maybe not right now, but in a couple of months, everything will definitely collapse. So let's go back to the Bitcoin chart and talk about how people actually enter the crypto market and how they should really do it. Again, we're looking at the current market situation. If you go to Google right now, we'll throw in various news headlines during the editing showing that everyone suddenly started writing about Bitcoin only after it surpassed the $100,000 mark. Why? Because that's how market psychology works. When something is needed by all people, when it is in conditional deficit, people flee en masse. This is buy when there's a truly valuable asset that might generate profit or is undervalued. It often goes unnoticed by the market. Bitcoin trading at $16,000 to $20,000 in 2020, 2021. In relation to the market, no one needs it. People completely forgot about it, like Bitcoin in 2020, 2021, when it was trading around $16,000 to $20,000. So psychologically, it's just not interesting to people. I need to say something a bit cynical. What if you see market inefficiencies? Yes, if you see that other people are behaving inefficiently, why not profit from those market inefficiencies? And if you take one action after watching this video, your trading will already increase multiple times. Better. What action? We'll discuss that later.
Okay.
At what moments do people enter the market? We have discussed it. We discussed Bitcoin from $60 to $100,000. When is the right time to enter the market? In my opinion, you should only invest in assets that you fundamentally believe in. And the second point is that you need to buy assets then when they are not needed by anyone, meaning when they are hitting some historical lows or are in a deep prolonged correction. That's the perfect time to buy. If we're talking about Bitcoin, you had about a year and a half to buy Bitcoin, averaging $20,000 to $25,000. Last bull market, there was a considerable amount of time to accumulate Bitcoin. In the range of $5,000 to $7,000, if we talk about even earlier bull markets, you had a whole 2.5 to 3 years to buy Bitcoin and then actually sell it to some not so lucky people at the highs. So what should you do at this very specific moment if you've entered the crypto market and want to participate in some way? And what should we do if we're not ready to enter at the highs, if we understand that this isn't the best time? Well, the first option is to wait for the next bull market. Typically, bull markets in crypto last for 3 to 4 years. Maybe this time it will be different because now we have large funds coming in, guys with big budgets who are buying up billions, plus they do it periodically. Some countries are saying that they want to create Bitcoin reserves there. And here, maybe we're in a situation where Bitcoin really won't be such a volatile asset anymore. It might enter some kind of consolidation and trade for a long time at levels of 100,000, 150,000, who knows, maybe even 200,000. The thing is, buying Bitcoin at $100,000 doesn't seem like such a promising idea anymore. Again, we're going to insert a segment about the top capitalized assets in the world, and Bitcoin is currently in 6th or 7th place. And we need to understand that if Bitcoin doubles in value, it will essentially become the most expensive asset in the world, except for gold. Could it be that we have some, digital wrapper, half of whose issuance is unclear who owns it? That is worth about as much as gold in terms of capitalization, half even of the price of gold. Well, hypothetically, it could be because human stupidity knows no bounds. But I wouldn't bet my money on that, as they say. And the second plan, so the way we can act if we still want to participate in the bull market is to enter during some minor corrections. So if we even open the chart of the current bull market and look at how it has developed, we'll see that, for example, after the rise to $30,000, we had a correction of 20%. After the rise to $70,000, the correction was 30%. And it's quite possible that even from the current levels around $100,000, we could see a correction of about 20%. And if we're given the chance to buy Bitcoin at $75,000 to $80,000, that would be a much more interesting entry point. At least it will be less emotional. Because once again, in my opinion, one of the key points you need to get used to is not making emotional decisions. In other words, the fewer emotional decisions you make, the more profitable your trading will be in the long run. Now let's move on to the most important part. How do we deal with FOMO? I've identified 3 main points that I try to stick to, and I'm ready to share them with you. The first important point, when you enter the market, you should have a clear understanding of how much money you want to make. It could be a percentage or it could be a specific amount. Well, let's say you came into the market with $10,000. You understand that if you make, for example, $30,000 or $50,000 during a bull market, let's say, yes, well, there should be a specific figure. Then accordingly, you will already be satisfied with yourself. Why is it important to do this for yourself at the very beginning when you come to the market? Because a bull market in crypto is always a missed opportunity, as they say, often on crypto forums, in all sorts of chats and so on. And I completely agree with that statement. You know, men have this phrase, girls, I'll close my eyes now. All the beautiful women in this world. Unfortunately, this is not it. And it's the same here.
Oh my!
There are over 1,000 coins in the market, and now there are even more than 10,000 coins. And you will never be able to participate in the growth of all of them. You just need to approach these tokens with a clear mindset. And if you initially set yourself the goal of earning a certain amount of money, then you have all this info noise. It should just pass you by. It doesn't matter to you how many coins there are and how much they've multiplied. You focus on your portfolio, specifically on the coins you've bought. You see, it makes sense for you to keep holding on. You believe in them. You see in them some kind of upside potential or not. Everything that happens in the background no longer has any decisive significance for you in this regard. And on the other hand, as a rule, when you are a newbie who just came to the market, some rockets are flying, coins are shooting, he is like, buy, what, sell, press 10 buttons, that's all. Of course, in such a situation, you'll just be jumping from coin to coin, looking for some hype stories. And there's a second great saying, I bought at the peak and rode the wave like a guy on a man's organ. I just don't curse on YouTube unnecessarily to avoid bringing down the videos. But you understand what this is all about. And when you've clearly formulated these numbers for yourself, believe me, it makes life easier. It becomes much easier for you to hold your positions just because you stop jumping around. That's the second point. To combat FOMO, define your entry, and exit strategy, and determine your strategy for adding to your positions. That's also an interesting nuance, because when people come into the market, I can speak from my own experience, right? And often acquaintances just message me asking, what should I buy? What should I sell? And you're trying to explain to people, well, bro, it doesn't work that way. If I give you a list of some tickers, but you don't know how to handle it, if you don't know how to manage risks, if you don't understand why we're holding these coins, you're likely to lose your money here. Moreover, we can have the same entry points. We can buy the same projects, but that doesn't work. So what did you buy? And after, I don't know, a few months, you got your 5x. It works a bit differently. And what's the key point here? That until you outline your strategy for yourself, right on paper, you're going to keep losing your money. You need to understand that my strategy isn't just written down on paper. I even regularly talk about it in my videos on YouTube. I'm explaining what I'm going to do locally, what I'm going to do in the medium term, and what I'm going to do globally with crypto. Yes, what are my plans for a bull market? And in this regard, when we initially identified some key levels for ourselves at which we will buy and sell, or it's much easier for us to add to our positions because once again, things are really taking off. Some rockets, well, I don't know, Ripple gave 500%. I managed to make a profit on it. Well, what about Starknet? We took it, well, we were writing it down like minus 50%. Yeah, we could have taken even more, for example, an XRP position and earned even more. Well, again, the point is that we can't just wait for the market from the start, and our brain feeds us illusions that, well, you could have looked, you could have done better, followed some strategy, but in reality you couldn't. So it's just the principle of some kind of casino. It works in crypto, partly depending on how lucky you are and how unlucky you are. Could Ripple have not grown at all and just stayed where it was? There on his 50 cents for another year as he stood all the last, but it grew. Could Sui have just stayed there like, I don't know, Arbitrum, Optimism, Starknet, and then grown by 50%? Could it? Yes, but it grew by 500%. Grew by 500%. Not all coins, grew or taken. Yeah, I'm really just mentioning some good cases, but there are cases where you end up with nothing. And there are cases where you have small dips in your portfolio, and you need to approach this with a sense of calm. And the third point on how to deal with FOMO is to really feel the idea that it's impossible to have children with all the beautiful women in this world. It's physically impossible. It's impossible to earn all the money in the world. And even Elon Musk, who is currently the richest person with a net worth of over $400 billion, is not the owner of all the money in this world. It's physically impossible. And if you really internalize this idea on a deep level, if you understand that the goal is not to earn all the money in the world, the goal is not to earn all the money in the crypto market, but to achieve your own earning goals, to reach the numbers you've set for yourself, then life will become much easier for you. Friends, let's take care of your deposits. The bull market is really such an interesting time when we can catch quite good X's and we can earn a lot of money with a fairly small capital, but at the same time, you need to be quite careful. Because if you give in to your emotions, if you fly in, as I call it, fool around, then be prepared for the fact that you will lose your money here. See you soon.